please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back then. The markets are holding on to the 10,640 odd mark. We have likes of L&T that are seeing some kind of selling pressure. So that's what's not helping the Nifty's cause. But otherwise, Bajaj Finance, what a dream stock. That's holding with a gain of around 3.5%, heading lifetime highs. And HDFC Bank as well. Remember, that's a rather large bank and a large weightage on the Nifty, as well as the Nifty Bank. Now that's trying to fight back. So for the bulls, HDFC Bank is the batsman that's playing well in cricketing parlance. Keep an eye out on that one. But how do you trade the Nifty? We have Ashwani Gujral as well as Prakash Gaba who join us. Good day, gentlemen. Thanks so much for joining in. Ashwani, what's the trade? Still sticking around this 10,640 odd mark.
Finding some support in this 10,630, 640. So probably good time to take some shorts off. And I think if this short covering, really takes shape, the FMCG space should lead it. And a lot of these FMCG stocks are likely to make fresh highs in this move because it appears whatever money is coming out of other spaces heading into FMCG. So I'd given HUL Britannia earlier. I think you can easily add ITC, Jubilant Food to that. So ITC is a buy with a stop of 280, target of 292. Jubilant Food is a buy with a stop of 2475, target of 2600. And Ultratech is a sell with a stop of 3900, target of 3750.
All right, let's just also see if we have the first rates on the European market. I think it would be a bit of mixed week opening given the way Asia has moved and also given the comments from US President Donald Trump regarding the US-China second round of talks. As well, the US yield has hit a 7-year high. So all of those are factors. Okay, I don't think we have the rates yet. Prakash, what's your call on the index and the stocks you're looking at?
Well, looks like Nifty and Bank Nifty is trying to find intraday supports, trading at an intraday support. So the bounce is possible from here. So I'd say yes, we need to be very stock. So if it goes up, Nifty can climb to around maybe around 10,700, 10,680. That's a possibility it can go there. I have two stocks, one long, one short. Tech Mahindra looks good. Can see an up move to maybe around 710 zones. Stop below 680 on Tech Mahindra should be fine. The stock that looks weak is Fortis. Looks like it can see slide to around 140 zones. Stop above 153 on Fortis is okay.
Okay, all right. Ashwani, I wanted your view on a couple of these stocks. We have the likes of Century Textiles that's recovered from the low point of the day. It's been a rank underperformer. I remember it was a shorting candidate. Has it made a bit of a base or will you look to short it at some point of time on this bounce?
See, other than FMCG and consumer, I don't think a lot of other stocks are making bases. I think it's just a pullback. If you get a pullback, say up to 1120, 1130, you could have fresh shorts. The only buys in this market are now FMCG and consumer. Okay. So keep buying them on all dips, but trying to bottom fish in other stocks can be fairly risky.
Okay, all right. Thanks so much, Ashwani, as well as Prakash for joining in and giving us your views. Well, there are select stocks that are recovering actually from the low point of the day. We told you about GNFC. That stock's building onto some gains on high volume, so keep an eye out on that one. We have Voltas that was down in today's trading session. Now, that stock, in fact, was down more than 6%.
Let's get chatting with the management of some companies which have announced numbers. Amongst them is Gujarat Pipavav. Their top line missed estimates in the fourth quarter due to lower bulk and liquid volume, but the growth in the container volumes has come in quite strong. The stock, though, not reacting well yesterday and not doing too well today either. Kjeld Pedersen, the MD of the company, now joins in. Mr. Pedersen, thanks very much for speaking with us. So, your volumes have seen a significant decline in the bulk segment, right? Could you tell us why that is and what's the outlook?
Yes, so for the bulk part of our business, we have a decline. We still see the bulk on a downward trend continuously, and we have done a little bit of research on the west coast of India, and the numbers we have found is that coal year on year has dropped approximately 10%, but the fertilizer has actually dropped with 25% according to the numbers we have at hand.
But what about the outlook? Are you expecting the coal as well as fertilizer volumes to bounce back at any point of time in FY19?
We have no high expectations to increase in our bulk business. We have seen it drop year on year for quite some years now, and it is aligned with the government's ambition to increase the domestic production.
All right, Mr. Pedersen, just a moment, sir. We have news flow coming through that an emergency cabinet meeting has started, and in attendance are chief secretaries as well as senior officers who are attending. So this regards to Karnataka, I suppose. And that's something that will be on top of our radar. But Mr. Pedersen, let's get back to talking about your numbers. And let's talk about the bright spots now. So you have strong 19% growth compared to last quarter in terms of your container volumes. What is the outlook here? And is there more ramp up that's likely?
We continuously work on getting new customers into our port, but I think for the immediate previous quarter, we are very proud to announce a record of 205,000 TEU. This is mainly borne by two additional services, so two new services in January and February respectively. So we had a large Maersk Line service that started to call in the middle of January, and in February we landed a new customer, the Chinese COSCO, in cooperation with Onhai. So quarter on quarter we managed to grow the container volume with 19%, and if we compare it with the same quarter last year, then we had a growth of 29%. So this is for us a turnaround in the container business. If we look at it year on year, then it's equal to a 6% growth, but mainly held up by the very strong previous quarter.
Well, Mr. Pedersen, so can we extrapolate the current run rate of approximately 200,000 TEU to grow through FY19 on a recurring basis?
We would like to see it on par or better for the full year 18-19 in terms of run rate. We continuously work on growing the container volume, but for now we are happy for what we have got, and we hope we can continue with the performance we have had in the previous quarter.
Mr. Pedersen, let's talk about your key segment now, which is containers. Here, the realizations have fallen quite sharply, actually, through the year. You had guided for about 6,200 rupees per TEU run rate. Is that a bit conservative, you think? Are you looking at the possibility of a rate hike?
We see that play out for the coming year with a realization of around 6,000 rupees per TEU. I think we will see for the first time that there will gradually be overcapacity of the west coast of India, and that will obviously put some pressure on the pricing. So for now we have been dropping a little bit, slightly on the realization, but 6,000 is a fair number to expect going forward. And we have free capacity, like in a number of other locations that we compete with. So our focus is clearly on filling capacity rather than looking at price.
A quick word on the margins then, sir. The Q4 margins, they dropped to what? Around 55, 56 odd. That's partly due to a one-off and also sharp increase in other expenditures. Now, going forward, will it come back to the 60-62% level that we used to normally see?
So for the full year, we have dropped 360 basis points, and we ended up for the quarter with an EBITDA margin of 56.2%. If we do a little bit of cleanup, then in the same quarter last year, we had a very high income of offshore and project cargo. And we also had some financial items that added to the income. At the same time, we have been doing dredging of our channel in this quarter. So if we clean it up for these three big ticket items, Then in comparison, the EBITDA margin is around 59 in previous year and 59 now.
Sir, is the promoter looking to sell? Has there been any interest from competitors? Would you know?
I'll have to refer that to the parent. For us, it's business as usual, and we are very determined that we want to continue to grow the port.
We'll have to get back on that one, sir. I mean, we're waiting to hear on that front. But thanks so much for joining in and giving us all those details. All the best for the remainder of this year. Well, keep an eye out on a couple of stocks actually from the broader markets. SRF, the numbers didn't look that bad for the stock to be down around 10%, but it seems the street is reading something into it. You know, Sonal is keeping an eye out on the con call. That's likely to start in the next hour or so, I think. But that stock has moved to the low point of the day. It's down close to 12%. So just keep an eye out on that one. We have Dalmia Bharat as well. That's another one that comes out with a set of numbers. Top line, we're expecting a growth. Yes, because volumes are expected to grow, but margin compression is something that we'll have to look forward to. Also, we'll wonder whether or not they're going to be putting up a challenge for Binani Cement. Only time will tell. Markets trading with a bit of a cut, but as promised, we have a couple of earnings that are lined up today. And Sonia's with us to run us through what to expect from Bajaj Auto and Ashok Leyland. Sonia, over to you.
Well, thanks a lot for that. You know, it's a big day for the auto sector because there are plenty of earnings. As you said, from the large caps, there's Bajaj Auto, Ashok Leyland. There are others like Amara Raja too that will come out with their numbers. Now, for Bajaj Auto, it's expected to be a good quarter this time around. Now, we have seen exports recover quite a bit, especially in some of their traditional markets like Nigeria. That will really aid the overall volume growth this time. Not just that, the three-wheeler volumes have picked up both in the export market as well as the opening up of permits in the domestic market. All of this put together will result in an overall volume growth of almost 33%, and that will lead to a revenue growth of around 33-34%. Now, the good part is we're expecting margins to pick up as well. Remember, same time last year, the margins were hit quite a bit. They reported just 18.5% margins. We're expecting them to come back to that range of 19.5 to 20-odd%, and the profit growth of 30% is what we're expecting too. Now, for Bajaj Auto, the realizations for them have picked up over the last few months. So, on an average, we're expecting about 63,000 rupees per unit as the realization that they would clock in this quarter around as well. Of course, raw material costs on the whole have impacted the sector, so that could limit the margin expansion a bit. For Ashok Leyland, you know, we've seen an overloading ban on many states, including the state of Uttar Pradesh, and that has caused a huge surge in demand for higher tonnage vehicles. In fact, in Uttar Pradesh alone, there's been a growth of 80% in commercial vehicle sales in 9 months of FY18. In this quarter particularly, the record high volumes is what we've seen. Q4 volumes have gone up by 25% year on year, led by a big growth seen even in light commercial vehicle volumes because of last mile connectivity and the increase in e-commerce sales. All of this put together will result in a revenue growth of 34%, margins to improve to 12.5%, and a profit growth of 54% is what we're expecting. So both numbers will be pretty good this time.
For the market, it looks like it's pretty much of a down day only, so it continues that way, about 160 down on this Sensex. But let's focus then on the commodity space. Manisha Gupta is here with a quick roundup of all that's making news. Manisha.
Thank you so much for that, Samira. Well, this week it clearly has been the crude oil prices as we continue to hold around 79.5, and we have seen a 3.5-year highs of $80 plus on that one. It is 22% up now for this year for the crude oil prices, and the kind of fundamentals that we are working with is clearly, telling you that the crude oil prices have it in it to see further gains from here on as well. But in any case, you have Goldman Sachs to Barclays to Morgan Stanley and Bank of America Merrill Lynch, all of them telling you that the crude oil prices from here on as well can see further spike, not just in this year, but in 2019 and in 2020 as well. The latest trigger would come in the sense of Venezuela presidential elections, which are in this weekend. Whatever comes out of that will set direction for the crude oil prices for the very near term. But in any case, you are looking at record high consumption from Asia. The global inventories have gone down, and there are enough and more concerns arising out of Syria, Iran, and of course the trade tensions there. Himanshu Gupta of Karvi Comtrade now joins us to talk more about strategies there. Himanshu, what is your sense with the kind of gains that we have seen in crude oil prices already and with the Venezuela elections on Sunday? How are you positioning yourself now for the last day of the week, and how would you look at Monday now?
Well, good afternoon. Well, talking about the shorter to medium term perspective, there are sufficient fundamental factors that are supporting that the uptrend is likely to continue. But having said the kind of triggers we have, the Sunday elections from Venezuela and the recent report from IEA that showing its concerns that because of the higher prices, some decline in the demand is likely to be seen from the Asian nations. And on the top of that, next week we have the monthly expiry of WTI crude as well. So combining all those factors, we can see some consolidation in the prices around current levels, and already the Brent hitting $80 per barrel. We can see some consolidation before moving higher. So from an intraday trading perspective, I would be looking to go short today. But from a medium term and a short term perspective, all the declines and the corrections are likely to be bought into, and we are likely to see further higher levels in the months to come.
That point is well taken. How are you looking at the nickel prices though? Because very strong gains onto that one. It has been an outperformer, 15 to 16% up in 2018 till now. The fundamentals have been positive as well, because we are looking at a deficit, and we also are looking at the fact that the EV demand, the stainless steel demand, is something that has been on the stronger note.
Well, absolutely. We have already seen today prices moving up more than 1% on the news that the global deficit is likely to widen. But having said, I think in the immediate short term, the metals like aluminum and nickel, they are more likely to be into a consolidation range rather than giving a fresh breakout, because we have already seen prices hitting multi-year highs in the month of April. So from a trading perspective, we can see prices on the higher end remain caged at $15,000 per metric ton on the LME, and on the Indian bourses we can see prices consolidating near 1,020 to 950 rupee per ton in the immediate short term.
Himanshu, is there anything that you're picking up in for the precious metal space? A slightly flat day there, but we have seen a huge amount of volatility come in for that one as well. And in this week especially, we've been able to break below 1,300. At these levels of 1,290 odd, are you looking at consolidation? Do you see it as a good buying level?
What I see is that the markets, although they have broken the psychological $1,300 per ounce, that was being viewed as a very good psychological support. But having said, the markets are still at very strong technical supports that is placed around $1,285, $1,286, and we have also seen prices recovering from those levels from yesterday. So I think there is a good chance that we can see this recovery extending in the days and the weeks to come. And if in case we see prices recovering above $1,300 once again, I think it makes a very good scenario where the markets are likely to see an extended rally hereafter. So all in all, I think it's a good time to enter, given the risk reward is still in favor of longs.
All right, Himanshu, Manisha, thanks very much for taking us through that. Well, keep your eye on the market. It's at the low point of trade right now, 50 points lower on the Nifty. But as we wrap up on Halftime Report, we leave you with some market opinion coming in from Rajat Rajgaria of Motilal Oswal Securities on the road ahead for the Indian market and the sectors that he's betting on. Thanks.
There's a lot of time to go for the year right now. We have just, if you're talking about fiscal, then we are just in the second month. So I'm not so pessimistic that I think that the top has been made, because the market gets so excited by this whole consumption space, then that it makes them trade very rich, and because of that, any level of disappointment leads to wild moves in these stocks. As far as the stocks which will do well, I think you will have to again come back to the domestic stories, the consumption plays, the rural plays, and the companies which are able to get their market share right. Valuation has ever been a reason to buy or sell lever, right? It has always been growth, and when they get into a double-digit growth and a 20% plus EBITDA margin, right, I think you will find enough takers for that stock in this market.